Rob, as a general rule, I tend not to like corruption. And it follows from that as another general rule, I tend not to invest my money in places that are corrupt. I'm doing the right thing, yes?
You, Oliver, are what we like to describe as a sucker, and I'll tell you why. A study from the London Business School has recently found that investing in the equity markets of countries with low scores from Transparency International, that is to say, relatively corrupt countries, systematically outperforms investments in the equity markets of more transparent countries. So you're losing out.
So I should think about it the same way as maybe sin stocks or value stocks, that kind of thing.
Yeah, this is what this seems to be suggestive of is a market anomaly, just like the ones you just mentioned. Small stocks tend to be more volatile. So if you can hang in there for a long time as an investor in small stocks, in theory, you should be rewarded for enduring all those ups and downs with higher total returns over time. Similarly, value stocks, which tend to be in beat-up industries, you take the risk of investing in a beat-up industry, you should be rewarded over time. Similarly, if you're willing to put your money at risk in an untransparent place, the money comes to you if you can stick it out, or so these results would suggest.
And these results give me a good time span over which to compare things.
Yeah, that's the issue. These numbers go back to about 2000. And the period between 2000 and the present is one in which emerging market stocks in general did pretty well. So what we could be looking at is a case of the commodities bubble inflating, a general fad for emerging markets coinciding with these Transparency International scores rather than a really robust result.
Well, let's say that you've convinced me and I'm ready to invest in corruption. Where do I start?
Well, I'm not going to tell you which countries to go for, but I will say this. Make sure you get your discount on the way in. What these results don't show you is that you can pay a full price for stocks in a relatively corrupt country and expect a still more full price on your way out of the investment. What they tell you instead is that if you buy at a discounted price in what is broadly speaking a troubled asset class and you're patient and you hold on, you might do pretty well.
Well, Rob, it looks like I have an interesting weekend ahead as I try to price the risk of corruption. Thanks very much. Have a good weekend.